Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Sunday. We're getting ready for a new week ahead. And what I want to talk about is, sort of the different ways to use order flow. That's why I like making these videos because, order flow is so robust. There's different ways to look at it. And, there's no one right way. Is there a wrong way? Well, I think the wrong way is not to use order flow altogether. But let's take a look at imbalances. So, before I begin, if you haven't already, be sure to subscribe to the channel so when I post a new video, you'll be notified of it. And, be sure to hit the like button so I know that you guys appreciate the content that we are working on. So imbalances, right? Imbalances are an important concept in order flow, right? The imbalance occurs in the two-way auction between the bid and the offer if there is more than a certain percentage, a certain ratio of aggressive buying taking place or aggressive selling. So a buying imbalance would be, usually what most traders use is a 4-to-1 ratio, meaning there's more aggressive buying than aggressive selling in the two-way auction by a ratio of 4-to-1, which is 400%. And, you'll see bars have selling imbalances, right? The net red numbers in the footprint and the blue numbers in the footprint. The red number is a selling imbalance. The blue number is a buying imbalance. And with order flow, right, we have what we call a stacked imbalances when you have three or more imbalances stacked neatly on top of each other, right? It's a very visual reference. You can see here's a stacked buying imbalance, right? And, software like my Orderflows Trader software, you have the option if you want to draw it out because you'd be looking at it as a support if it's a stacked buying imbalance or a resistance area if it is a stacked selling imbalance. All right, so that's just the basic, most order flow traders are already familiar with that. And, strangely enough, not many order flow traders really give much thought to figuring out the imbalance level, right? They just sort of go with a 4-to-1 ratio, which is, sort of an industry accepted standard, but you're not tied to that. There are traders that use 3-to-1, 3.5-to-1, 5-to-1. And what I want to talk about is, sort of a pet favorite of mine, which is a 10-to-1 ratio, meaning you're going to have 10-to-1 more aggressive buying or aggressive selling in the two-way auction. So how you would set it up is you go look on your footprint chart, depending on your footprint that you're using, you got to find the imbalance trigger in percent. Okay, some software may call it something else and change it to 10-to-1. In my software, since it's a percent, it would be 1,000, right, which is 10%. Or not 10%, it's 1,000%, which is a 10-to-1 ratio. Now, one of the other things to keep in mind is, the higher that you go in your imbalance percentage or, imbalance ratio, generally the fewer imbalances you're going to see. And especially if you're looking at stacked imbalances, you're going to see even fewer of them. So here I have changed it to an imbalance trigger in percent of 10-to-1, which is 1,000%. And you can see that stacked buying imbalance that we had earlier is no longer there. The stacked selling imbalance is no longer there, but you are seeing buying imbalances, right, and selling imbalances. Okay. Now, what I like to do with imbalances is draw out areas from where they're appearing. Here's a stacked buying imbalance right here. Now, generally, if you're going to get, some sort of sweep through the market where there's no counter trade, and really what is indicative of a sweep taking place is a bunch of zeros being left in its wake, right? You can see here it's 0 against 70, 0 against 45. Someone just bought it up basically from 98.25 all the way up basically to 99, even 99.25. There was very little counter trade. It happened like super fast. It happened within an instant. Someone just had a big order. They had buy, whatever, 200 contracts. Okay, fine. 200 shouldn't really move the market in the E-minis unless there's no liquidity. And you can see they just bought it up basically a point really fast. Okay, and did it hold? Well, it forms a level, basically, an area of potential support. And you can see it came down in there and traded there over the next 3 minutes. Now, again, this is looking for stacked buying imbalances at a percentage of 1000% or, a ratio of 10 to 1. And you don't see very many because, to be honest, you're not going to get a lot of imbalances at a level of 10 to 1. Now, sort of getting back to how you can draw it on your charts, because, you have imbalances, you want to be able to use them somehow, okay? And, a 10 to 1 ratio is quite strong. So what I'd like to do, right, is I'll go into my stacked imbalance setting, right? I'll make sure it's enabled, and I'll draw it out until tested. But what I'll do is I'll change the number of imbalances, right, from 3, meaning there has to be 3, to just 1, meaning there just has to be 1, and it's going to draw it out if the next bar doesn't come back in to retrace it. All right, so I make sure it's enabled. I'll draw it until tested, and the minimum amount of imbalances for a stacked imbalance it's just got to be 1. So basically, if you just have one imbalance out there that hasn't been retraced back into in the next bar, it will give me a potential area that I'd be looking for the market to come back to. Okay, so look at this. Okay, so here we have, just sort of going back. This is Friday. We'll just go back to the cash open. At what time was that? 8:30. And again, right after the cash open, you see this bar. You got 2 zones being drawn out. Where did the market come right back? It traded above, and it came right back literally to that tick of the lower one, right? Imagine if you knew this level beforehand, right? 69.25. You just put a bid in there, 1 tick stop. Okay. 69.25 trades all the way back up to 75.75. And again, I'm not advocating say, oh, you just trade these all with a 1 tick stop. What you're going to do is you're going to build a trading plan around this. I make these videos not to tell you what to do, but to get you to start thinking, hey, how can I use order flow in my own trading, right? How can I build a trading plan around it? Okay, here's a stacked buying imbalance. It's 2 levels, right? So it's a minimum of 1, so it's showing 2, right? What does the market do? It goes up, comes right back, it's 1 tick through it, then goes back up again. Okay, here's one here, here's one here. We literally go up, come right back down to these levels. Here's another level right here. You can see it just got within 1 tick of it, right here, 90, 39.80 got within 1 tick. Obviously, these levels got through it. Here's another stacked one, right? 1, 2, right? And what did the market do? It came right back down to it. And you could start to see, hey, how maybe I could use these, right? If everyone talks, I see these videos and things, everybody loves 99%, a 100% winning ratio, 95% winning ratio. That's all garbage. Really what you want to have is not necessarily such a high winning ratio, is you want to have a low risk ratio. Basically, you want to be taking trades where, you could risk, a tick or 2, maybe even 3, have these areas, right? Imagine this area could come back to it, right? At 96, it just trades back up to 96.75 and then sells off. Here it gets within 1 tick and then it rallies. Now, honestly, just having one imbalance by itself, in its own isn't often very effective, right? That's why traders like stacked imbalances. It's a little bit more effective. So what you want to do is, instead of 1, because 1 is not that effective, honestly, especially at a ratio of 10 to 1. So what you can do, where is it, stacked imbalance? You change it to 2. So it's got to be a minimum of 2 either buying imbalances stacked neatly on top of each other, or 2 selling imbalances stacked neatly on top of each other. Okay, and again, depending on the market that you're looking at, maybe bonds, you can get away with 1, or 10 years you can get away with 1, but on a market like E-minis, it's probably not going to be very effective. So again, let's just go back to the cash open. Now I'm looking at an imbalance level of 10 to 1. And 2 stacked neatly on top of each other. Right here, here's this stacked buying imbalance. Again, the ratio is 10 to 1 instead of the normal 4 to 1, and I'm only looking for a minimum of 2. Comes right back down to it, gets one tick through, rallies back up. Here's a stack selling imbalance, but the next bar traded into it. We're looking for the ones where it's like this, where the market goes away from it, and then comes back down and tests it. So imagine, right? You know this. You have a stacked buying imbalance, 10 to 1 here at 39. 75 and a quarter, 75 even. You just put a bid in here with a stop, maybe a point away. You get filled there. There's another one, right? You get filled there. A nice move. Here's a stack selling imbalance. It comes right up to that level and comes off. Okay. Let's see if there's any more in here. Here was a stack buying imbalance. Okay, this one, fine. Would have stopped you out. Okay, fair enough. But you've had some nice trades. Here's just one. It's just unfortunate. It just came back 1-2 ticks past it and then popped up to new highs. Okay, here's a couple that sort of blew through. Then you got a selling one here. Okay, 40.09 down to 05. All right, so the whole point of making these videos for you guys is to get you thinking on how you can adapt order flow. You don't have to trade it one way. Oh, Mike says I have to use a 4 to 1. I use a 4 to 1, but you could use a 10 to 1. Use a stacked imbalance of 2 imbalances, right? It doesn't have to be 3 if you're using a higher percentage. Okay, I mean, this was on Friday, right? If you go back, on the night session, here was a stacked one at 7:30 in the evening. Right, you see the market came off, came back up within a tick of it, and sold off. Was there any more during the European hours? Let me see. I'm not sure. Okay, we got it here. Came down, just traded 2 ticks through before it rallied up. There was a selling imbalance from earlier. That one failed. Okay, fine. Here's one, came right back to it at 4 in the morning, or 4:04. And it popped back up. Okay, so hopefully I'm getting those, getting your brain starting to think outside of the box, outside of sort of the standard way of using order flow, so that you could adapt it and make it your own. Really, that's what trading is about getting an idea and making it your own, rather than copying exactly, turning into, well, this is what so and so does, I have to do this. No, you could make that adjustment to improve your trading. So I hope you enjoyed this video, and I'll catch you guys on the next video. Bye-bye.